The drone companies are pretty early, right? And I think, the reality is sometimes you buy for team and some core technology, and there's a lot of optionality about where that comes. Sometimes the original idea ends up becoming completely fulfilled. We talked about Android in the previous segment, how Google made that a huge success. But sometimes you take the team and you go focus on other areas because of the talent of that team. In case of the drone companies, I'm reading the same reports that you are. There's a view that maybe drones could be applied for mapping technology, to actually create photographs for navigation, or it could be applied for broadband internet service. But I think anyone who looks at it would say it's pretty early for those technologies.
So, there have been so much activity in the tech space. Facebook buying WhatsApp for $19 billion, Oculus for $2 billion, mega rounds of funding being raised. I mean, we're talking about 11-digit rounds happening, and, multiple rounds like that so far just this year. What's going on right now? Are things getting too hot?
Well, look, I think, as we've talked before, there's a number of major revolutions going on in technology. There's this desktop to mobile shift we talked about, many times before. There's this data center shift to the cloud, which is also coincident with this rise of big data. And there's the move from the traditional internet to new forms of the social internet. And so I guess the point simply is that if you're an incumbent technology company and you're not riding one of these key trends, it can actually get pretty scary. You can actually get left behind if you're not one of the key players in one of these three major shifts. On the flip side, if you're one of the startup companies or growing companies, that is a personification of one of those shifts. One of our companies, Cloudera, in the big data space, is a good example of this. If you represent, the personification of that trend, you can be extremely strategically valuable to a lot of people. And I think, as you may have seen, Intel did a quite large investment in Cloudera just a few months ago, or just a month ago, as an example of that.
So, I've been asking pretty much everyone on the show, do you think we're in a bubble? We've seen what's been going on with the NASDAQ lately. There's been a bit of a tech sell-off. I was speaking with George Zachary of Charles River Ventures. I want you to take a listen to what he had to say.
To me, it's been a steady sequence of very large rounds. It means we are in bubble territory. And if you notice, very few people are saying we're in bubble territory.
Right. You're the first person who's actually come out and said
it. No one wants to say it because no one wants to break it, because everyone wants to cash out before it's over.
Are we in bubble territory?
Well, I think it depends how you define it, quite honestly, right? So I think, if you want to make the comparison to the 2001 era, I would say we are not, at least dramatically not, in the majority of the market. The majority of companies that are being funded have real business models, they have real revenues, in many cases, real cash flows, which is quite different than that 2001 period. The multiples are getting up there. The revenue multiples or earning multiples where cash flow or earnings exist are getting higher. I do think that the roughly 10% pullback that we've seen in the NASDAQ thus far is likely to have some impact on the late-stage rounds. And I think it is likely we'll see at least some moderation because of that. But broadly defined as a bubble chasing companies that have no business model earnings or value prop, I think that's not accurate in terms of where we are today.
So are you saying you don't think the growth that we're seeing is sustainable? The valuations and the funding rounds we're seeing, that's not sustainable. That's not going to last.
I think the valuations of many of the companies are sustainable, but I don't know that they'll continue to accelerate at the same pace that they have.
Okay.
So in many cases, investors are looking ahead at what next year's revenues, or even 18 months ahead revenues or cash flow, and pricing some of their investments off of that. And that growth rate has to be there in order to support those valuations. But I don't think it'll double again or triple again in some of these cases, in the following 12 to 18 months. That, in some cases, we've seen in the private markets.
So you guys just raised a new round. You're starting your next chapter. Facebook was the huge hit of the last chapter of Accel. What's going to be the next one?
Well, I think we're looking essentially at a very broad range of enterprise technology, mobile technology, marketplaces. And so I think we're looking across, essentially all of the same software and internet areas that we covered previously. I think one of the areas that's harder to report on because it doesn't face the consumer is the incredible revolution that's happening around the data center and the cloud. And so, sometimes, the press reports it around a lot of these trends in big data. But fundamentally, whether it's storage, whether it's networking, whether it's all the tools to manage the amount of data that's being created, we're just at the very beginning of that revolution, just like we are in the mobile space that we've talked about before.
Venture capital firms have changed dramatically just in the last 5 years. A lot more firms are going full service. Andreessen Horowitz has sort of been, a pioneer in that area. How do you see Accel's place in this pantheon?
Well, first of all, I think the most important thing is you got to find entrepreneurs that you really very much believe in and want to work with you. And I think they often choose us because of a certain area of domain or vertical expertise. So whether it's partner of mine, Ping Li, in big data, I think is very well known as someone who's personified a lot of the major investments in that space. Certainly I try to spend a lot of time, as you know, thinking about the mobile space.
Right.
And I think we hope that entrepreneurs, first and foremost, will value that vertical knowledge and that access to the network around a certain space. But all of the firms, of course, are also adding other resources, whether it's helping PR, whether it's helping recruiting. And I think that's in addition to Andreessen Horowitz, there are other firms like ourselves that are adding those resources as well.
Etsy, one of your portfolio companies, is moving to wholesale. What do you think of that?
It is, yeah, it is. Jim Breyer, led the Etsy investment. Etsy is a pretty amazing company. I think hopefully with a lot of people that are watching the show that are users of it, it is sort of the leader from a handmade marketplace standpoint. There's about 1 million sellers making handmade goods. But historically, the way that they would distribute those million of products being created was through the Etsy website. And increasingly, there's now the opportunity to distribute them through actual physical retailers in addition to the Etsy website. So we see it, the company sees it, if I should speak for them, as supporting their mission of supporting their sellers.
You mentioned Jim Breyer. What's Jim Breyer's future at Accel? Everybody always wants to know what he's up to.
Jim's a great partner and mentor to many of us at Accel, and he continues to go forward and be a partner. I think we've talked very much about how Jim has a range of interests, has a range of personal interests as well, and we think it's great that he continues to pursue some of those personal interests he has while still remaining a partner of the team.